Hey y'all, welcome back to my YouTube channel. My name is Alayla. I trade Trendlines, and I know it's been a while, but we're here. Yay! So we're gonna go over trend lines, my trend line strategy, the strategy that I use in the market on a day-to-day basis. Uh, Basically, the steps, what to do, how I get my setups. So we are going to be looking at volatility 10. That's the index that I honestly love. I'm loving that index right now. So that's what we'll be focusing on. You all know that I have to do a top-down analysis. Whichever chart I'm on, I have to start from the highest time frame possible. It is a must. It is a must. I cannot miss this step. Start on the highest time frame possible. See what is happening. If the market is in a downtrend, if it's in an uptrend, if it's consolidating. In the case of consolidation, I tend to just leave those charts alone because the trend lines don't particularly thrive in those markets, so I just leave them alone. I have to see the market trending like this. This is beautiful. This is perfect. This is honestly perfect. This is what I'm seeing, what I want to see. So what I do first, I come in with my directional move trend lines on the highest time frame possible that the chart allows me to go on. Outlining the trend, ensuring that all candles are on one side of the trend line. If it seems like a second trend line can be added, go ahead and do so also. You know, you can do that. You just want to outline the trend itself. Then what I like to do is come in with my major key levels. These are very important. They play a very important role in my trading, in my overall trading actually. I use these levels as key levels to determine my TP. I can also completely exit the market around those areas if I really don't know where I want to exit. Those areas can also be entry points along with other confluences, all right? So you have to use other confluences with it. All right, so let's see here. That's one. We have another one here because we have resistance. Well, basically the market used it as resistance to push to the downside. It used it here as support to push up, and there are rejections around this area here. I don't really like to have plenty, all right? Not plenty, not too much. Not too much, because sometimes it'll look really overcrowded since I like working with a lot of trend lines on my charts. Don't judge. So this is one here. Also, we have the market using it as support to push to the upside, resistance, support. So in the event that the market does come back to these levels, I can say, hey, the market can either use it as support, in a case where it uses it as support to push to the upside, or it uses it as resistance to push to the downside, you know? So that's basically why I use these levels, and why it is very important that you outline them. The last one I'm going to highlight here is down at this level. We have a lot of rejection, support. Okay, so that's another one. Down here now, because the market has never been to these areas before, we don't have any past data to work off of. So no key level can be outlined here, not on the 24-hour time frame. And I only mark out my levels on the 24-hour time frame. This can be done on any time frame once there is a trend, all right, and you're going with the trend. So we see the market pushing to the downside here. All we do, wait on a bullish candle, proof that the market is going to reverse, or we have a bullish candle there. Now we need to drop to the lower time frame. That's a time frame lower, to see a trend developing, and then we come in with our trend line. Now the trend that we're looking for, the trend has to be retracing towards this red trend line that the market is following along. It's falling along this red trend line here, so that's what we're basically trading alongside. All right, so since I'm on a 24-hour time frame, I'm gonna drop to the 4-hour time frame. Now what also tells you that the market is gonna do a retracement is if you see a change of character. In this case, the change of character is gonna be above this high, so we need the market to break above here. So let's see what the market does. Alright, so we have a change above that. Now we're waiting on a trend to develop. We're waiting on a proper trend to form. Okay, we're pushing. So in this case, we do see that a trend has formed. We have swing highs and swing lows. Now we come in with our trend line, and now all we do is wait on the break of this trend line. Alright, this is using the bounce method. Alright, so we just wait on the break of this trend line here. Alright, so that's where we would enter. You can either wait on the close of the candle, you can enter at the break if you're really confident. Just ensure your stop is above the high that broke the trend line. Ooh. And let's see how the market plays out. Alright, so eventually it hits TP. So that's a simple breakdown of the bounce method, how I use the bounce method in the market. Have my higher time frame trend line, then I come in with a counter trend line once I see a trend forming, and then I wait on the break of that. My stop is at a safe place, the high or the low that broke the trend line, and then my target is the swing low that started the retracement in the first place. Now we're gonna try another example here. We're gonna look for a change of character, then a trend to form. Alright, we're pushing, we're pushing, we're pushing, we're pushing, we're looking for another way how to use the method. So alright, look, I'm on the 4-hour time frame. This shows you that I don't trade every day because all of these are 4-hour candles. I have to wait until another opportunity comes my way. Alright, so we have a change of character here. We have the break above this high. So that is what we use to say, okay, the market is coming in with a new retracement. All we do, wait on a trend to form. Alright, we're going to wait on a trend to form. Do we have a break of that high? Yes, we do have a break. Now we come in with our counter trend line. Coming with our counter trend line. You have to ensure that the trend develops so you can avoid fake outs. Alright, and then we wait on the break of this new trend line that we just drew. Alright, don't overthink it. Do not overthink it. You just have to wait on a trend to form. And then we see the break there. This is where we enter. Your stop is at the swing high that pushed down the market to break the trend line. And then your target is at the low here that started the retracement. Now we watch the market fall. You see what I'm saying? So this is why I love to trade synthetic indices. This is why I love using the bounce method, because you don't have to have a lot of brain power around analyzing, seeing where the market is going, as long as you know the directional move on the higher time frame. You see where the market is going. That's how you can trade. That's how you can trade using trend lines. That's a method. That's a way. It's quite simple, to be honest. So that's basically it for this video here, explaining the bounce method. If you need additional help, please check the description. And thank you for watching. Bye.